Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service providing insider news and knowledge to insiders. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you for everyone listening in.
The oil patch is playing havoc with the Fed. Can you explain?
Well, Jerome Powell on a Wednesday did, I don't want to call it an about-face, but he kind of embarrassingly had to say, well, this inflation thing, maybe it's a bit more persistent than we thought, and what is driving that? Well, yes, we know that the used cars have gone up in price, and there have been, airline tickets have gone up in price, and the Fed is kind of hoping that will just all kind of fix itself eventually. But the elephant in the room, we still believe, is the oil price and the gasoline price, because that is not something the Fed will be able to easily dismiss away. And I think that's going to be something that's going to be front and center for them in the coming months as they, try and stick handle this tricky inflation growth dynamic that's unfolding in the markets. And, despite, what you may have seen on business TV today being, we're doing this on Thursday, this interview about oil falling on Thursday. I mean, oil was just at a year-to-date high. It's fallen all the way back, Jim, to where it was 3 days ago. It's closed above $70 today. I believe it's $71 West Texas. So for any of the commentators that you may have heard saying, oh, well, the Fed's quashed the commodities boom, it's all over. No, that's not our view at all. And we think we put out our top 40 piece just today, actually, saying, titled that the relentless revenge of the oil patch. After years of it being kind of shunned by professional money managers, quite profitably in the sense that they underweighted the oil patch, and they put their money into like tech stocks that worked rather well for a couple of years, but that hasn't worked so far this year. And sure, is it possible that everything changed after Jerome Powell gave this press conference yesterday saying, oh, well, we think there may be a problem with inflation, and that, we saw some indication that maybe they will raise interest rates a little sooner than expected, like sometime next year. Is that going to deflate a commodity cycle? I don't think so. Possible. Never say never. I'm always learning. I've been around, a few commodity cycles now. Usually it takes a central bank to take action, not just get up and blab away on a TV screen to stop a commodities bubble, or I don't want to even call it a bubble, just a cycle. And no, I take that back. I mean, some commodities are in a bubble, but that's what you get in a commodity cycle. You get some commodities are soaring, other commodities kind of lag, and you think, well, what's wrong with coffee or whatever, and then like a few months later, it's taking off. It's not a prediction, but this is the general nature of commodity cycles, right? That it's not even as Tony Greer said in the daily briefing on In Culture Money, on Tuesday. Commodity cycles don't happen in linear paths; they go up and they go down. And so, today oil pulled back. It pulled back, didn't pull back as much as silver, for example. And that's I wouldn't read too much into that. I would just, suggest that the Fed still has its work cut out for it, and that the oil patch's revenge is not done. It's coming to get everyone who believes that oil is dead, that everyone, all the professional money managers and advisors who think that they can underweight energy stocks and outperform. That lesson is not over yet. The oil patch is back. It didn't disappear because Jerome Powell acknowledged its existence, indirectly on Wednesday by saying, inflation, is a little higher than we expected. So, we expect the fireworks to continue, over the next, few months, and we firmly expect that crude oil will eventually force the Fed's hand to actually do something instead of talking. It'll force them to act. The Fed is a long way from acting.
There are a record amount of margin calls out there, not calls, but margin debt. Does this play a factor in what's going to happen to the market if there's a downturn? People are going to have to cover those margins, aren't they?
Well, we saw that in the cryptocurrency space, over the last couple of months. So, sure, it's a highly levered market, not just with retail, but with hedge funds. And what is interesting, Jim, is that yesterday the Fed did this technical adjustment where it increased the interest rate it pays on reverse repos, which is, kind of, I hope I'm not boring too many people already with that, but they basically, money markets now will be able to get another 5 basis points from the Fed. And this is a big deal because what it ends up doing, my understanding, and this is, there's a fellow named Barton Options, which I follow on Twitter, who covers this quite extensively. This should probably increase the ability, the balance sheet capacity of big money center banks in the United States. So when you talk about leverage, you're talking about banks, you're talking about big banks. The Fed actually just gave them more breathing room, ironically, by giving a few extra basis points to the money market funds. My understanding is that what this means is more money will go into the money market funds. It frees up the bank balance sheets to actually do things like lend money to their prime brokers, who could potentially invest money into the market. They were doing that today. They were buying tech stocks, but we'll see how long that the tech stock trade lasts. It, could persist. I don't want to, predict that set a prediction that, that tech is going to, end up leading or lagging the market one way or the other. We're just going to have to kind of see how this plays out. But again, I just do not believe that the energy trade is done, despite what you might have heard. And we're having more leverage is actually probably going to come into the market, based off of this little maneuver that the Fed did with the reverse repo rates. Where that money goes, though, only time will tell.
Gold had a big retreat today. What happened there?
Okay, so here's my take on gold. The first thing that I noticed is that the gold-silver ratio is still in its range. It has not broken to the upside, which would be a very pro-deflationary indicator. I don't think it wouldn't be great for the whole sort of junior mining space initially. The whole space, especially the silver miners, that would not be great. It stayed within its range. So I don't think anything's been resolved on the deflation-inflation debate, despite the kind of hysterics you might have heard today in the market on from some commentators. What I think happened with gold was real rates yesterday, today, the short end of the curve, like the overnight to 5 year, went up. They went up because people go, oh no, the Fed's going to raise interest rates. We have to reassess. Well, the Fed may raise interest rates sometime, maybe next year, maybe not. But people had to reassess that. So yes, the short-term rates went up. Okay. In 2 days, the inflation rate did not go up. So basically, real rates went up. That's that is a negative for gold. Okay. So what happened was in the short term. The short term being in a couple of days. Okay. So what happened? All those people who did pile into gold because they bet that real rates were going to keep going down, they cut their losses. Okay. Then you had these algorithms who come in, real rates are going up, but we got to sell gold. Okay. So you had this kind of real rate trade. My view on this is that, the real rates, inflation, unless you believe we've had peak inflation, if you believe we've had peak inflation, then maybe the gold trade's gonna stall out here for a while. But, if you believe that we have not had peak inflation, then I would put myself into that camp. I'm open to be convinced that the inflation's peaked. I just don't believe that yet. The fact that inflation, in my view, can continue to go higher means that real rates will continue to go lower, right? So as inflation goes up, it drives down the real interest rate. So, if my assumptions are correct that inflation has not peaked, then, that real rate trade that you saw today, people dumping gold and silver because real rates were going higher, I think that will unwind over time. So we will see. If I'm wrong and we have had peak inflation, and there are plenty of deflationists I've heard their arguments. I'm well aware of their arguments. They may be right. I think we all have to be a little humble in terms of our confidence levels going forward. But you gotta either, if you're going to participate in these markets, you have to have a view. And my view is that until the Fed comes in and actually tightens, not just talks about it, but actually does it, oil's going to continue to go higher. A lot of other commodities are going to continue to go higher, and inflation is going to continue to go higher. So, we'll see. That's my view on inflation. Gold got kind of kicked around today because of this unwind, this little, just a reality check, that, look, it's never a one-way street, and real rates, they went up the last couple of days on the short end, and so next, we'll see what happens in the next week or two. But I wouldn't be overly worried about a prolonged bear market in gold or anything like that at this point. And for more than one reason, because I don't believe the real rates are going to be able to go sustainably higher. And secondly, even if the deflationists are right, then gold should do okay, because then we're into this really lousy environment, and gold is going to be the few things that people can go to have some feeling of safety. I mean, it won't do great for the silver side of the equation, but gold could do all right. So it's been a rough couple of days for gold and silver here, but I don't think anything's been resolved. And look, anyone who's traded the crypto market this year, this kind of volatility is just, it's just part of another day in the office. So, with central planning so prevalent in the markets, when central planners get it wrong, like the Fed has, there's going to be problems. And they admitted that they got it wrong on inflation yesterday. So, and I guess there's some people say, well, the Fed got credibility yesterday. I don't think it got credibility. Jim, it would be like your teenage son, coming home and saying, Dad, I smashed up the car. Sorry about that. Well, did that just gain him credibility as a good driver because he admits he crashed up the car? No, it gains him, credibility being honest, but doesn't make him a good driver. So anyone who concludes that the Fed is now gained credibility in managing the economy because they've admitted, oh my goodness, there's some inflation that might be a little hotter than we thought. I think that's probably giving the Fed way too much credit, and that means that I think the gold and silver trade, and the crypto trade for that matter, although it's a bit more complicated, are still intact. The quality cryptos, I mean, there's a lot of cryptos that at any given time will flame out, but no, I still think the alternative to the Fed trades are still alive and kicking here.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, insiders' filings particularly valuable after sell-offs to source value opportunities. What does that mean?
Well, it's on days like this where you have major market moves onto the downside where you can really put insider filings to work, because what you want to try and filter out here is, okay, the market's throwing out a lot of stocks. Which, though, are the ones worth buying on sale? They're, when everything goes on sale. But when you go to the supermarket and the apples are on sale, you want to look and find the apples that are still glossy, right, and aren't bruised, and those are the ones you want to buy. So the insiders can help you kind of filter out the bad apples and point you to some of the shinier apples. So I've already been looking at, what insider filings are coming through the last 2 days. And, we're already seeing some interesting filings show up in the cannabis space. We see a timber company's got some insider activity. So, there is there are some names that are starting to pop up already. And insiders have 5 days to file in Canada. Usually the buys get filed quicker than the sells. So I think by tomorrow, we should have some pretty good ideas on who's been buying here in this downturn, and hopefully for the weekend we can point to some of those. This is like these are the opportunities that you can really put insider filings to work, because when the market's going up, you have to wait to kind of see which insiders are buying the uptrend, and that doesn't happen very often. It does happen. It could be very valuable when you find that, but when prices fall, insiders are much more likely to buy a bargain, and so we're looking to see which stocks they're buying in the last couple of days. So we'll also be very interested at the sector level and to confirm our view that the resource rally is not over. If we see a lot of insiders selling over the next few days on weakness in the resource area, I'll have to reassess everything I just said in the first section, right? Like that, if insiders are getting out now based off of this Powell press conference, then I'm missing something. The world has changed. The Federal Reserve can pull out its magic wand and change things with the press conference. But I want to see the insiders, head for the exits. And up until the last, recently, they've still been pretty upbeat given the big run we've had in resource stocks. So my expectation is we will see insiders buying some of these beaten down commodity plays over the next few days, but we'll see. We'll see what happens. I'm looking forward to seeing what pops up on our screens.
Ted, thank you so much for the update.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.